From precise decision making to tactful investment strategies.
Do you have what it takes to perform the best in the field of investment?
Hello and welcome to the First Capital Unit Trust Rugby Challenge. My name is Rahul.
And I'm Shalomi. And today, we at First Capital have an exciting game that allows you to learn about unit trust funds and offers you the chance to win them as well.
We believe that this will help us achieve our objective of improving the financial literacy for everyone. Our challenge will take you through an interactive learning process to better understand unit trust and use the game of rugby to give you a more practical understanding on how these funds work.
At the end of the game, 5 lucky winners will stand a chance to win First Capital Money Market Fund accounts with units worth of 10,000 rupees. And what makes its prize so special is that it will only grow with time.
Before we tell you how the game works, let's start by understanding unit trust funds. Unit trust funds are pools of funds where individuals and organizations can invest. Fund managers, like us, collect these investments and create a large pool of money and invest in different asset classes to give back an attractive return for the investor. We oversee these investments considering factors like tenor, risk, and asset class.
Unit trust funds mainly invest in 2 asset classes, stocks or equities, and fixed income assets such as fixed deposits, commercial papers, repos, government securities like treasury bills and bonds. They offer varying liquidity levels, risk profiles, and potential for returns. In our First Capital Unit Trust Rugby Challenge, there are 3 competing funds: the Money Market Fund, the Wealth Fund, and the Equity Fund.
Our flagship fund, the Money Market Fund, invests in short-term fixed income securities, providing flexibility like a savings account with the returns of a fixed deposit. In essence, investors can use this for short to long-term investments with a low risk that gives healthy returns. From rugby game sense, this can be characterized as consistent, resilient, and flexible.
The Wealth Fund focuses on long-term fixed income investments. It can provide irregular gains and losses based on the market movements. It's a balanced and mid-level risk mediator, emphasizing a long-term approach. From rugby sense, this can be characterized as long-term, balanced, and tactful.
And finally, the Equity Fund, which ventures into the equity market with a long-term outlook. It offers the potential for attractive returns and can carry higher risks. Our fund managers take calculated decisions to minimize potential risks and losses. From rugby point of view, this can be characterized as aggressive, scorer, and risk taker. So Shalomi, do you think they are ready for kickoff?
Now hold on. Let's first apply what you learned about unit trust funds into the First Capital Unit Trust Rugby Challenge. To do this, we have created analogies where we have categorized some of the key actions and situations in rugby. Therefore, each fund represents a different approach to risk, gain, and tact, much like investment strategies in the financial world.
We selected 9 prominent rugby actions and situations: try, conversion, drop goal, penalty goal, yellow card, red card, penalties conceded, ball carries, and turnovers won. These favorable and unfavorable actions are categorized into the 3 funds depending on its suitability to the fund's profile. Our first fund, the Money Market Fund, a conversion, provides routine stable gains after scoring a try, making it analogous to short-term low-risk investments. Ball carries represent strategic incremental progress, similar to low-risk short-term ventures. This move provides flexibility as well. Penalties conceded serves as a setback, much like losses in conservative short-term approaches, emphasizing the importance of avoiding such penalties in both rugby and investments.
Next, let's delve into the Wealth Fund. Penalty goals are reliable points without excessive risk, are keen to balance investments and provide steady balanced returns. Turnovers won, similar to capitalizing on opportunities, mirrors balanced risk investment, making it an ideal choice for the Wealth Fund.
Lastly, we explore the Equity Fund. A try represents bold, aggressive moves in rugby, akin to high-risk investments with the potential for significant gains. A drop goal requires precision, just like calculated long-term investments that hold the promise of substantial returns. A red card is a drastic penalty that mirrors high-risk investments where there is a potential for significant losses.
The points awarded for each respective action is as follows.
Likewise, the above drill will carry out from the quarterfinals up until the final and bronze final. We will consider every team's action to calculate points.
For an example, in a particular match, we will consider all the conversions scored by both the teams for the money market fund points. The funds with the highest points at the end of the tournament will be crowned as the best performing fund.
So here's what you need to do. This is simple. We want you to think as investors and select a fund you are most likely to invest in. What is it that you're looking for in your investments? Is it higher risk for an attractive return or lower risk for a low return? Do you prefer the flexibility to withdraw your funds anytime? Or are you more interested in a particular asset class only? All you have to do is register using the provided Google form. Select the fund you believe will have the highest score at the end of the First Capital Unit Trust Rugby Challenge, and most importantly, what would you choose as an investor? Keep a track of the fund's performance through our YouTube, Facebook and Instagram. We will publish periodic updates. Remember, if your fund outperforms the other funds by the end of the First Capital Unit Trust Rugby Challenge, you qualify to be part of our raffle draw to win a money market fund account with units worth 10,000 rupees.
In summary, we have tried to draw parallels between rugby actions and situations with investment strategies.
By associating specific rugby actions and situations with each fund, we've highlighted how the risk and reward profiles align with various financial approaches.
Whether you're rugby enthusiastic or an investor, this unique perspective can offer valuable insight into the world of risk and gain.
Please note that this analogy is a creative way to align rugby actions and situations with investment characteristics and may not perfectly capture the complexity of real-world investments. It's essential to consult with a financial advisor for proper investment decisions. The past performance of the funds is not an indicator of the future performance. Further, the investors are advised to read and understand the contents of the explanatory memorandum before investing.
We are glad you watched our video and hope to see you register for our First Capital Unit Trust Rugby Challenge.
For First Capital, I'm Rahul.
I'm Shalomi.
Thank you for watching.